Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Alright, for the next few minutes we're going to be looking at the SPY, which is our proxy for the S&P 500. We're going to be doing our Elliott wave analysis first and then wrapping things up with some basic technical analysis at the end of the video. Right, so without further ado, let's do a really quick recap. Okay, if you've been watching any of the previous videos on the SPY, you know that we're in a fifth wave of a fifth wave of a fifth wave of a fifth wave, all the way up the cycle degree, and here we are inside of the fifth intermediate wave, and inside of that fifth intermediate wave there are 5 minor waves that we're tracking, which are inside of the fifth intermediate, inside of the fifth primary, inside of the fifth cycle. Right, so nothing's really changed, everything's basically the same. We're still expecting the market to top out this summer. A little further out into the summer, this is what I've been saying for a long time. We've got a bunch of targets up here we've discussed in previous videos, they are all still valid. One little thing has changed, and it is, hold my hands up, a complete error on my part. I've had to adjust the count to accommodate for that error. So what was the error? Well, since bottoming in what I say was a minor wave 4, we began our move up in our minor 5. Counting the minute waves, we had a 3-wave move up in the wave 1, and so establishing or assuming this to be our wave 1, we saw a 3-wave correction down into what we assume to be our wave 2. Now at that point, obviously, we believe that we're setting up a diagonal. Now the next thing I looked for was a 3-wave swing where we got our 1, 2, 3, 4, 5 here, because I've changed the count, but I saw this as a 3-wave swing into a 3. So if we just move this down here for the moment, which went beyond where the 1 went, and then a 3-wave swing into a 4, like this, and then we were putting the diagonal up like that, and then we were looking for a 5, like this. So, excuse me, like I said, I've mentioned in previous videos, allergy season for me at the moment, and my throat is scratchy as hell. I'm struggling with my voice a little bit, and it'll be like this, I'm afraid, for the next 8 weeks or so as we get through the summer. And I'm doped up on so many antihistamines, I'm amazed I'm awake, to be honest. But anyway, either way, getting back to the point, we had a 1, we had a 2, we had a 3, which was shorter than the 1. And then we had an A, B, C into a 4, which was shorter than the 2, and then we had a 5, which was shorter than the 3. So it looked like an ending diagonal, except I didn't appreciate I'd made a mistake. This 3 is not shorter than the 1. When we measure it, it ever so slightly goes beyond the length of the 1. Nothing wrong with completing beyond the end of the 1, that's what we'd expect to see where it completed, but it's actually marginally longer than the 1. So I either mismeasured or I was just being careless, so that's a mistake. So this can't be a contracting ending diagonal. It can, however, be an expanding ending diagonal. So that's what I've ended up with. So everything jigs along a little bit further, keeping our targets in mind. We're looking for the fifth minute wave to top out somewhere in amongst all of this in our box between our minor 1 from 4, 61.8% of minor 1 and 3 from 4, and 61.8% of primary 1 and 3 from 4, which is the top yellow line here. So we've got a whole bunch of fifth confluences up here. Find our fifth, of a fifth, of a fifth, so on and so forth. Right, so why have I had to change it? So let me explain. So the C is now going to come over here, at the top of this portion here, and then the 4 is going to come down to the bottom. Oh, I'm moving the B. The 4 is going to come down to here. Okay, so let me explain my thinking. We've still got this 3-wave swing in a 1, which is not an impulse, right? So we can't count this impulsively. And even if we were to try by going 1, 2, 3, 4, we'd have an overlap. If we were to go 1, 2, 3, 4, we're close to an overlap, and we can't dig out a pure impulse for the 3. So it's not impulsive. Right, so it looks like a diagonal. It can't be a contracting ending diagonal, so let's look at an expanding ending diagonal. The idea being 3 waves into a 1, that's the same. 3 waves into a 2, we haven't labelled that, so let's just do that now. A, B, C. And then we get 3 waves into a C, which is a very large zigzag here, in comparison to the 1 and the 2 that is. Like so. So 3 waves, 3 waves. Then we get an expanding 3, which is bigger than the 1. Has to be bigger than the 1. Then I'm expecting a 3-wave move down into a 4. like so, and then a 3-wave move up, and obviously it wouldn't look like that. Excuse me. It would look something like this. Another zigzag. So the rules for an expanding ending diag is after we get our 3-wave move in the 1 and a 3-wave move in the 2, the 3 has to be longer than the 1 and complete higher. Then we get a 4 which has to be deeper than the 2 and complete within the bounds of the 2 but transgressing wave 1. And then we have to have a 5 which expands beyond the 3, completes beyond the 3 but is also longer than the 3. So basically, unlike a contracting ending diagonal in a rising wedge, where each successive wave must be smaller than its prior counterpart, the opposite is true in an expanding ending diagonal, where each subsequent wave must be larger than its previous counterpart. So the 4 has to be larger than the 2, the 3 has to be larger than the 1, and the 5 has to be larger than the 3. So going on this, all I've done here really is basically apply the minimum requirements. Okay, so here's our 1, here's our 3. Our 3 comes to the 161.8 pretty much, which is a nice target for a 3 in an impulse or in any motive. It's longer than the 1, that's cool. And then we've got our 2, so now we've got to take the length of our 2, okay, and project it down from our 3 top to find that we are deeper than 100%. So here's 100%. So what we actually need to do is move this down because we've got to be deeper than 100. It only has to be a little bit. It could come to the edge of the channel down here and be around the 123.6. Maybe this is going to be a 1, 2, 3, 4, 5 waves down into an A. Then we'll get a B. Then we'll get the C. And then finally this 5th wave has to be longer than the 3. As the expanding ending diagonal continues to expand in a series of 3-wave structures. So we come up to the 3 waves down to the 4, let's say roughly here, and we find our 100% at 432.26, which is right in the middle of our targets 431, 433, 434. And we've got our 5th of a 5th of a 5th of a 5th all the way up here. So this would be a perfectly legitimate expanding ending diagonal. Pretty rare, but they do happen. Contracting patterns are more common. We see those rising wedges more common, but that's not a legitimate count in this instance. So that's the best I can give you Elliott wave wise at the moment. That's the best I can see. I'm still expecting, yes, we might get a big drawdown, a short-term drawdown here, which could be very confusing and look very bearish, only to come back up again. So this is the whole idea, is that the topping process of what we're calling for, which is the completion of a 12-year bull market at cycle wave degree. It's going to take some time to do it, and it's going to be quite ugly, and it's going to be quite, you know, like if we look at what we're going to be looking at here, if we look at the series of wave structures we're going to end up with, by the time all of this is done, right, it's going to look something like that, which is an absolute hideous, higgledy-piggledy, backwards and forwards, topping mess of multiple peaks. It's pretty much exactly what you'd expect to find at the top of a long bull market. The topping process is taking a lot of time and it's just very ugly. Now there might be an alternative way of counting this, but I'm not really prepared to introduce it yet. I want to see how this develops. If we do not get this pushed down into a 4, if we do not invalidate the top of this wave 1, which is roughly right around our visual point of control here, let's just pop a line on the chart. If we do not come down here as expected through this 1 to make a deeper 4, which is bigger than the 2, and instead we come down for a short time, respect this wave 1, do not transgress, and then push to a new high beyond this current high at 425, if that happens, I'll introduce the other count and we'll look into that as and when that occurs. So I'm just going to pop that. I'm not going to get into it now because I don't want to introduce too many ideas at once and create confusion, because the alternative is not, well, it's not any prettier than this. Let's put it that way. It's probably even uglier than this is. But let's not worry about that. We'll cross that bridge. We'll cross that bridge when we come to it. So if we take out this high here, we'll probably look into that thing next week. If we take out this high here without transgressing the 1, that would be a good argument to look at it. But in the meantime, some kind of further move down, maybe. It's, be honest guys, it's very tricky at the moment. Approaching a peak, well I think is a peak, price actions all over the place, it's really difficult to decipher, and I'm having to pick out some pretty complex patterns to try and make this work. So that's the best I've got for you at the moment. If you've got any ideas, be glad to hear about them in the comment section. Like I said, I can't count this initial 1 impulsively. There's not 5 waves here, this is a 3-wave swing. So unless there's something wrong with our interpretation of the minor wave count, you know, unless there's an alternative in here that I'm not seeing, I'm open to ideas. Alright then, so we'll end the Elliott wave portion there. We'll do some basic technical analysis to wrap things up. So we're just going to hide our count, come out to the weekly time frame for a minute, bring up our indicators. We're going to zoom in on the more recent price activity here, and we've got our RSI set down here, 10 closed with a green 30 level representing oversold and the red 70 level representing overbought. We also have a MACD with a 10 for the short term moving average in blue and a 20 for the long term moving average in orange. We're going to bring up our exponential moving averages. We have a 10 in blue, sorry, 10 in yellow, a 20 in blue, 60 in orange and 250 in green. What can we see here? Well, at the moment, it's not the biggest and nastiest and most bearish of all candles. We've come back up from the lows of the week so far. It's Thursday. How this candle closes could be quite interesting. Do we gobble up the previous weeks and have a bearish engulfing candle after setting a new high? That could be a pretty bearish signal. We're still above the 10, the 20, 60 and 250 by a long way here, especially the 60 and the 250 on the weekly time frame. It's getting really quite extreme now, the distances from these long-term moving averages. I think I've mentioned that before. RSI on the weekly time frame, we have bearish divergence between the high on the 3rd of May and the high on the week of the 7th of June. So this high and a higher high, high and a lower high, is very little to read into yet. If we do come down potentially into that wave 4, then up into a wave 5, we will end up with a high and a higher high. And that could result in a high, a lower high, and a lower high in the RSI, possibly, which would be triple divergence. That would be a pretty strong sign of the top. We haven't seen it yet though. MACD, short-term moving average, cross over the long-term moving average, trending down slightly, some darker red bars in the histogram building up in size, but no sign of a breakdown yet. If we do get that breakdown, this could be a period of consolidation. The market may have topped. I can't, like I said, the only other way of counting it is the alternative, which I'm not really happy introducing yet, but maybe there's a possibility the market is topped. But we haven't finished at any significant fib target or any significant level, so it still feels like it just wants to push a bit higher, get up to those levels, and then roll over. So let's look at the daily time frame. On the daily time frame, we're below the 10 exponential, we're above the 20, trading in between the two as I speak to you. Above the 60, above the 250, long way away from both again. We had a high and a lower high in the RSI, high and high in price, which resulted in this breakdown here, which you saw. So we could consider this a resolved divergence. We had a lower high divergence, and it was resolved with this breakdown in price. We'd be looking for the same now. We've got a high here. We have yet to set another high. No divergence to speak of yet. Crossover on the short-term time frame over the long-term time frame. Little red bar on the histogram here on the daily. A really weak-looking MACD. This final move, which we're calling an expanding ending diagonal, is really weak. You know, we've had readings going back to June, April 2020, June 2020, 3rd of September 20, 17th of November, 21st of April 2021, all trading above the 5.5 or 5 on the MACD, and then we've got this very lackluster movement on the MACD here, very, very weak, and rolling over while we get a higher high. So huge divergence here in this final wave. Like I said, you can consider this reset. We didn't go to oversold, but we have got some divergence here to speak of, especially in the MACD with this very weak lackluster movement in the momentum going on. So signs that the market's weakening, which we'd expect to see. a complex ending diagonal, resulting in a very long-winded and aggravated and ugly topping pattern. I wouldn't be surprised either to see that at the top of a bull market. Still leaning on the side of pushing a little higher. Still leaning on the side of pushing a little higher. We might have a sell-off in the meantime to make this 4, and then another drive up. If we break through the 2, before we leave, let's just point that out as well. So we're way 2 low here, way 3 high here, way 4 here. So if we come down and this 4 keeps coming down and goes beyond where the 2 began, then this isn't an ending diagonal. If price breaks out of this channel and invalidates that 2, then I think we have to consider the market having peaked and we're impulsing down. If we see some kind of impulsive move coming down and we collapse next week, or tomorrow perhaps, from here, then we can consider that. But for the meantime, this pattern is still perfectly valid. I'm still expecting us to push higher. We'll just have to keep an eye on things. Alright then guys, thank you for joining me on this technical analysis of Aspire. I hope you've enjoyed it. If you're new to the channel, please smash the like, subscribe, hit the bell notification icon to remain informed of future video releases. Leave us a comment in the comment section below if you want to. And as always, thank you very much to my patrons. Your support is greatly appreciated. If you're interested in becoming a patron, check out the link in the description below. You can go and read the different tiers. If you are interested in joining, I literally just loaded up a video, an in-depth look into the Dow Jones transportation average and the industrial average, an hour-long video going into detail about the potential top of the market, how we're going to find it, what we're looking for. In fact, and you can unlock an exclusive video similar to that every week for just £5 a month. If you're interested in the higher tiers, go and have a read and see if any of them take your fancy. Also, if you're not following me on Twitter, please do. There's a link also in the description box below. Alright guys, take care. I will try and get a video out over the weekend. I am very busy this weekend though, so it may have to wait till next week. So have a good one. All the best. Speak to you soon. Bye bye.